How's it going out there? It's May 12th. And I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down headlines and tell you what's really moving these markets. I had an interesting weekend. It's my car. I have a Lincoln Navigator. Probably the nicest car I ever bought in my life. Really, really cool. 2018. And we leased it. And the lease is up next month. So I figured on Saturday, we'll take the day. Got a babysitter. Went out to the dealership, see what our options are. Maybe get a newer version. We drove all the way out there to Jacksonville. And there was nobody in these shops, which was a little weird when you think about it, right? You think used cars are really going through the roof. We saw that in the CPI data. I'll go cover that in a minute. People buying cars like crazy, but there's a reason why they're buying used cars. I'm going to tell you right now. Because there was nothing available. Not to mention the 2021 of the Lincoln Navigator is, if you sat in it, you wouldn't know the difference between 2018, 19, 20. It's the same exact thing. But they only had 3 on the entire lot. Only 3. And 2 of them there were longer versions, which, wife and I didn't want. And the other was a black label, which is one of their top lines. But it had features that we would never get. Entertainment system in the back seat. You don't need that anymore. Kids have iPads. You have young kids, you want to have something. Believe me, if you're going on long trips, which we do a lot, which my daughter, both of my daughters, with sports and stuff like that. It was like an off-white color with black and white interior. And, when you're buying a new car, especially if you're buying a new car that's you're going to pay a premium price, you want to have it to your own specs, right? If you're going to pay a lot of money, you want it to be exactly what you like within the car. And now you can build your own cars on all these sites, which is pretty easy. You just go to that site, build it, you can get your own specs, and it's, designed perfectly for you. And that's awesome. But if you did that on their website and said, hey, this is the car I want, 6 months. It's going to take you 6 months to get it. Think about that for a minute. They would say, no, it's after 4 months, and it's going to be at least 6 months, maybe even longer. So you're looking on the lots, there's not a lot of cars on the lots. There's nobody in these places. They're not selling anything. I tried to look to see if they had 2019 or a 20 or anything. Nothing. They had nothing. So we have a Cadillac dealer across the street. I said, all right, you know what? Let's go across the street. By the way, this car is for my wife. My wife is the most non-materialistic person. Every time I take her out, I try to buy her something nice. She always spends the money on the kids or whatever, and I'm like, just spend money on yourself, have fun or whatever. So we decided to get like a nice car, right? So we're looking to get a nice car. For me, I'm a Southerner. I drive a pickup truck now, which is awesome. I love it. But we went into the shop, and I said, let me test an Escalade. I never tested an Escalade before. There was none on the lot to test. You couldn't test it. Couldn't drive it. None on the lot. The dealer said there's 3 coming in. We ordered 3 in about 4 weeks. They'll be here. Maybe in 4 weeks, he said, which probably means about 6 to 8 weeks. So I said, what are the specs on them? They were all ugly colors. Again, you want to get a car as, you could build it. If you're going to pay a lot of money for a car, you want the car you want. And, they had 3 of them coming in, and none of them were like, anything we would have bought. One of them was super crazy expensive. We were like, no way, we don't want that one. But it was amazing because when I said, okay, if we build our own, what's the earliest that we can get this? And they said the same thing. Over 4 months, definitely over 4 months. The chip shortage killing us. Nobody in that, no one in the Cadillac dealer at all. No customers at all in these places. I mean, think about it. You're going to get a car. You want it to be in your favorite color at least, right? So you don't want to have to buy and settle for what they have on a lot, but you're going to have to do that. And you got to have to hope that they actually have a car on a lot. And our lease is up, right? So our lease is actually up, so we need to do something. So we try to look at the Suburban at Chevy. 0 on the lot. So this is 3 different dealerships. 0. They had 2 Tahoes, which was my old car, and I wasn't too crazy about it. I had problems with it, so I didn't like it. But they said easily over 4 months if you ordered today. And they really had nothing. So these lots are half empty. Think about that. When have you gone to a car lot and seen it half empty? Not used cars. Used cars, they sell like there's a reason. Here's the reason. Because you can't really buy a new car today. Unless you want to wait 6 months. And a lot of people can't wait 6 months, especially if they're coming off of a lease. But if you want to buy a car, you want it right away. That's what you want. That's important. But when you look at the bigger picture here, These guys have no inventory in the lots. Again, I never saw that before. I see a ton of cars on these lots. They aren't selling any cars. And you're at least 2 quarters out from this problem getting fixed. So what happens if you own Ford or GM? And I got a question on this about a month ago. We've seen chip shortages for like 2 months now. I said, you know what? These sales, they're going to be delayed. So you might see these stocks get hit. They're taking charges. Their plants are closed. All these dealers said that their plants are actually closed. They're idle because, why am I going to pay workers or give them money when we don't even have anything to build? And we can't build them because of the chips. If you're looking at them, and now that I went to these dealerships, I mean, the next 2 quarters are going to be absolutely horrible for these guys. I mean, I didn't think it was this bad. I was thinking, well, maybe you could buy Ford, GM on a pullback. I see this all the time with companies because it's all manipulation anyway, these earnings, legal manipulation, but it's not that, if you sign big orders in Q1, you can push them out in Q2, Q3, Q4 to make sure you make your numbers, right? It's all a game. It's all to play accountants. That's why we have quarterly earnings and not, 6 months of earnings. And I get it. Everybody needs to make money along the line. But these orders are not going to be delayed. I've always seen it as a buying opportunity, saying eventually these orders are going to come back in. So when the stock comes down, it's a buying opportunity. These orders may not come back in. And take me, for example. I'm probably going to purchase the Navigator, the 2018 that I have now. And after I purchase it, I'll trade it in for something else. I'll use the equity that's in the car to trade it in. Or I may just give it back and say, okay, I'm going to buy a used car for now. And again, I'll use that as equity to purchase a nice car maybe 6 months from now, 8 months from now, I don't know, a year from now, I have no idea. But people aren't buying things and saying, okay, I'll receive it in 6 months and I'm cool. They're walking away. So these aren't delayed orders. These orders may never happen. So how is Ford GM going to make their quarter? I mean, think about it. It's probably good for Tesla. I know you have the skeptics on Tesla. I don't really, all I say is never, ever short Tesla. Ever short Tesla. But I did go on the site. I'll explain why in a minute, why you should ever short Tesla. But I went on their site just to see. I'm not going to buy a Tesla. I can't even fit in them yet. If they have a truck which they say it's coming out, maybe. But it's hard to go from a truck to sedan when I'm driving the truck for so long. But it takes about 2 to 3 months to get that car if you build it online. It's a lot shorter compared to maybe 5-6 months. We don't know. This is 2-3 months. But think about this, because this was the year, guys. This was a year that all these companies, all the automakers were going to catch up to Tesla. They're all releasing new electric vehicles. It was all coming out. Tesla better watch out. The competition is here. Well, no longer. None of these are on lots. None of them are being built. I mean, it's going to be another year that Tesla has this market to themselves, basically. You try to buy an electric car outside of a Tesla, good luck. You're not getting it for 9 months. No way. That's a pretty big deal. Think about new cars, Model S, whatever. The market share is increasing while it's taking a big risk off the table. I'm not telling you to buy or sell Tesla. Again, it's Tesla right now is the only game in town when it comes to EVs, pretty much. And I usually stay away from the stock. Again, I never told you to short it because it's a cult. To bet on Elon Musk, people will die for. I'm not even kidding. People actually die for this guy. I'm not exaggerating. I want proof. My wife's friend is buying a Tesla. And she said, I'm getting it in 2 weeks. She told me, I'm quoting her. She told me, she's like, I can't wait. I'm so excited. This is a life-changing event for me. Think about that for a minute. A life-changing event. You're buying a freaking car. It's a life-changing event. You have a kid, it's a life-changing event. You get married, it's a life-changing event. You're buying a car. Life-changing. That's common. That's common. That's what Tesla's about. That's what the stock is about. That's what Dogecoin is about. I mean, I complain because I'm into the crypto industry and I love the crypto industry and I feel like this is a BS coin, but it's more than that, Doge. It's a lot more than that. I mean, you've seen Doge and Tesla both be called frauds by so many people, smart people. But it doesn't matter. I mean, fundamentals don't matter with these things. They're cult names that are being bought by a new generation of investors, and these people refuse to sell. They're holding on forever. They don't care about volatility or anything. They're holding forever. And the more that people trash these names and call them frauds, the more the younger generation wants to buy them. Why? Because to them, they're looking at it as an FU to the system, to the destruction of the dollar, to Wall Street. Hey, we're here. This is what we could do. It's incredibly, incredibly powerful. I mean, look at GameStop. It's $150 a share still. Yes, it went to $400. This thing should be in the single digits. It's a $10 billion market cap with basically no business model other than selling games through stores. Again, I like that, but most games you don't buy offline anymore. You can download anything. Look at the new Sony PlayStation. They have two versions. The other one of them is you could still use a disc for, the disc for PlayStation 4 and stuff, and 5, but they have the other version, which is really selling. That's just you download only. What do you think the next versions are going to be? Download only. Yeah, they raise money, they have cash, and they're going to try to get into online and stuff like that, but really no business model. This is the cult of how many people buy these things. When it comes to Tesla, listen, competition was one risk. That's off the table. No competition this year. You don't know if they're going to meet demand? Well, they're probably going to meet demand. They're probably going to surge. You're going to see a lot of people say, you know what, I'm going to buy a Tesla now. Especially if you can get in 2 and 3 months, because it's the only game in town other than buying used cars. I'm seeing this here. I'm seeing this through emails. I want to hear from you, frankcurzioresearch.com. Especially if you're a car dealer, I want to hear from you. And there's several that emailed me 3 months ago, and showed me letters from their suppliers saying, we're not going to be able to deliver this for a very long time. And in 2 months ago, it started, the chip shortage didn't last. Now it was like, wow, look at the chip shortage. It's crazy. But getting back to the shortage, and there's a ton of companies that are being impacted right now, where you have to expect that they're going to take a hit on earnings and sales in the coming quarters. Maybe not this quarter. You look at Best Buy. Went to Best Buy, took pictures of it, posted on my Twitter at Frank Curzio. I mean, first time that I've ever seen shelves empty. Shelves were empty in Best Buy. When have you seen that? They have nothing in stock. So when's the last time you got the PlayStation 5? They said Thanksgiving, Black Friday. And people aren't ordering it. You can't go there and say, hey, I'm ordering it when you get one. No, they walk away. They try to get it someplace else, which is bad for Best Buy. You're not buying it at these stores. You're trying to get it someplace else, which the only place you could probably get it right now is eBay and off sites, and you're going to have to pay double for it. There's no supply. There's no supply of anything out there these days. It's crazy. But if you got people going into these stores, it's not, hey, you know what, I'll buy this later. No, they just, all right, let me find other alternatives. It's going to hurt a lot of companies. I mean, it's crazy when you think about it because the multiples on so many of these names, I mean, they're priced for perfection. Yeah, we're seeing names get hit and some growth names, a couple technology names, but a lot of names are still at their all-time highs. The S&P 500 and the Dow are close. They had all-time highs this week. Yes, they pulled off. The VIX is going higher. I get it, but they're near all-time highs. They're trading at crazy multiples. I get it. But we're far from perfection. Sure, you can say, well, Frank, you got low rates. You got trillions of stimulus. You got Fed buy. I get it. But did you see the CPI number from today? Up 4.2%. Of course, much higher than estimates. I mean, how is this number actually higher than estimates? Hey, if you look at economists, they have to stop hanging out with like rich people and rich crowds. Looking at bell curves and studying things in the past. I mean, you look at all the indicators, right? All those indicators, almost all of them, which are lagging indicators, which look at last month, and then they get revised 3 different times. So if you want to know what's happening now, you have a better indication than economists because you are in the real world. We're in the real world. We see where prices are going higher. We see house prices, other people, the house is being sold for more money. You're like, holy cow. I can't believe how much they sold across the street. My house is bigger than that. Ours is going to be worth more. You're seeing it everywhere. You're seeing it in food price, electricity prices, lumber, everything across the board. How is this number higher than estimates? And do they not see this coming? Because inflation is already here. It's been here. And now it's showing up in a gauge that the Fed has created to almost always show no inflation no matter what. Excludes food and energy. But inside those numbers, one of the biggest things was used cars. Used cars rose 10%. Used car prices, 10%. Why? There's no cars on the lots. None are being shipped for 4 to 6 months. I'm going to be forced to do the same thing and buy a used car. And since this is happening in 4 to 6 months and we have the CPI come out every single month, where do you think the CPI is going to be in the coming months? Because used cars was the biggest component. You saw food prices rise. You saw gasoline prices, we'll talk about that later with Daniel, are rising. All commodities are rising. We saw the normal rises, but now a big rise in used cars. But if you can't get cars for the next 4 to 6 months, where do you think this is going to come from? What do you think is going to happen with these prices? It's going to go higher and higher and higher. And CPI, I don't know if they're going to... These economists, right, when it beats estimates, it's taking a bunch of economists from sell-side analysts and saying, okay, here's the number. This is what we think. Here's the average, the mean, whatever. And it blew it out. That used car component is going to continue to go higher and higher and higher over the next... There's no inventory in cars. People have to buy used cars instead. I know 2 people on where I am in Florida who sell used cars, and they're on fire for the last 3 years on fire. They're like, holy cow, I've never seen anything like this. It's kind of like real estate. There's more real estate agents than actual homes for sale. So what do we have? Commodities surging. We all see it. Home prices are surging. 1 month supply in the market. There's usually like a 4 to 6 month supply on average. Probably like 5, I would say 5.5 maybe on average. It's 1 month. Home builders have to build homes. There's no homes. What do you think is going to happen to prices? I know your price has gone up tremendously. The price of my home has gone up tremendously. It's going to go up a lot more. There's no supply. It's simple economics. You can't say, well, things are getting crazy right now. It's going high. No. Why is it going high? Because there's no supply. Last year, there's no supply 6 months ago, and there's even less supply now. Where do you think prices are going to go? Until we have more supply in the market, which is going to take at least 6 months to a year minimum, home prices are going to surge. And if you're in the right areas like Texas, Florida, the income tax states where you saw the population for California decline for the first time since the 1700s, why do you think that's happening? It's going to happen to New York as well. Again, fueling home prices definitely across the country, but in certain areas, it's going to be even crazier. Wages are starting to surge. Just saw a terrible unemployment number on Friday, where the actual rate, rose, went from 6% to 6.1%. And if you watch CNBC that day, they had all these economists on. They have a bunch of windows, like 8 to 10 windows. I know a lot of those people. Some of them I interviewed on this podcast. I respect them a lot. They were all clueless. They had no idea what was going on. They were like, how could this number go up? There's no way. How could this number go up? They would factor in 2 million, million and a half. They go through all their estimates right before. 1.5 million, 2 million, whatever. They had like 33,000 or something jobs. And then when they went to Steve Leisman, when the number was reported, they're like, where is the Steve? And he's like, wait a minute. And he couldn't find it for like 3 minutes. I think he found it, but he couldn't believe it. That the ad was only 233 and that the unemployment rate run up. And then Santelli got on and said, this is the number. Here it is. It's right here. And they were just like, I don't know. This is temporary. Aberration. It's not temporary. These economists, they don't go out into the real world. They're not like you and me. They don't go to bars and hang out. They go to rich circles and everybody's rich. And then they, I'm not putting them down. They're smart people. But man, they have no clue. They have no clue what's going on right now. Just go outside. That's all you need to do. Try going to a restaurant, a bar, a retail outlet. There's a sign in almost every store. Having trouble finding employees. We're short-staffed. We're closing early. We need help. Why is this happening? Because people are making more money staying home than working. It's that simple. If you want the numbers behind it, it's $32,000. That's the number. 2 different firms came out with that number, $32,000. Okay, that's the amount. So if you're making less than that, you could stay home and make more money through benefits than you can through working. And I don't blame these people for staying home. Think about how much you make right now. And someone said, I'm going to pay you exactly the same, but you could stay home. Would you do it? Of course you're going to do it. I like to spend more time with my family. I like to be in my pool. I love what I do. But if I'm going to make just as much for staying home and having fun and you can play video games and hang out and do whatever you want, people are going to do that. That's what they're incentivized to do. You can't blame these people, but that's the case. The best way to remedy the situation, end unemployment benefits. I know. Probably people say, end unemployment benefits. What am I going to do? Yes, there's certain people that are struggling, but it's easy to get a job. You want proof? Numbers came out. This is called JOLTS, right? So basically, it's how many jobs are available on the market. This comes out every month. This number came into 8.1 million jobs available. 8.1 million jobs available in the United States. It's the most since the Labor Department has been keeping track of this data since 2000. The most that are available. Based on Friday's unemployment report, there's just over 9 million people getting benefits. 9 million people getting benefits, 8.1 million jobs. Of course, not all the jobs are going to be in the right areas, but you have to take away the punch bowl. You have to. It's there. The data is here. Inflation's here. What are you thinking? I'll break down with Daniel later with Drunkenmiller, too. I mean, saying that the destruction of the dollar, we may not have the reserve currency stats for 15 years. Drunkenmiller's saying that? I guess he warned 2 years ago, I know, and you know. But saying the same thing. How are these policies still in place when we don't have the pandemic anymore? It's dying down. We all see it. It could come back. We could get different strains. I don't know. But as of right now, everybody's pretty cool. We're fine. See, more and more people wear less masks indoors. Even Gottlieb, which is one of the top people from the president, is saying, hey, you know what? We should really start looking at relaxing the rules for wearing masks indoors. It's here. We're seeing all the numbers come down. Everything's cool. More people getting vaccinated. But taking away the unemployment benefits, that's one solution. We see Montana and another state do that. But we all know that's never going to happen under the current administration because cutting free checks in blue states is the easiest way to lose an election. I'm not being political there. That's a fact. I don't care if you're a Democrat, you're going to agree with that, right? It's a lot of vote. If you're giving people free checks, they're going to vote for you. If you take that away, good luck. So it's not going to happen. But it mixes this political agenda with the Fed. And it happened under the Trump administration as well. You're mixing those together. And it's crazy right now. It's crazy. Because let me tell you, the Fed's mandate used to be 2% inflation. Okay, we see 2% inflation, then we're going to slow down. Then it went to like, hey, we're going to see a little bit more, maybe 3%. The Fed's mandate is not inflation anymore. The Fed's mandate is to get unemployment to the same levels that were pre-COVID. So you're looking at 3.6%, 3.7%, under 4%. But how could you, if that's your mandate, how do you get that unemployment rate lower by maintaining the benefits for all these people? Because they're never going to go back to work. That's why the unemployment rate went up. So what do we have? Current administration, a Fed come out and said, all right, we need more stimulus now. No. Are you crazy? The Fed pedal to the metal here, the Fed. Continue QE, that's what they said, right? Bond buying. Low rates are here to stay. I'm not thinking about it yet. And more stimulus is on the way. But it's a good thing you don't have anything to worry about, guys. You have nothing to worry about. Nothing at all. Nothing to see here. You know why? Because it's transitory. That's the new word, transitory. It's brief. It's going to be brief. You have nothing to worry about. This is just temporary, this inflation. We're going to be fine. There's not a Fed governor to explain why inflation will be brief. I mean, I would love an explanation, given that you have zero plans to take your foot off the gas. I just like, why? It's just, they're saying that, but they're not explaining why. I mean, you really expect businesses all at the same time to say, okay, guys, it's time to stop raising prices? No, because they all have pricing power now. Everybody has money. They're passing these prices on to consumers. But these prices are going to continue to get raised and increased by most businesses, especially restaurants and bars. If you're looking at these places, on average, they have to operate at 80% capacity to break even. Now that they're allowed, most of them are allowed to be open 100%, they're still operating at 60, 65% capacity. And it's not because of lockdowns or restrictions, it's because they can't find people to work. So how do they get people to work? They provide incentives. A couple places by me, restaurants, one said they're providing $1,500 sign-on bonuses for cooks, waiters, waitresses. Did you see the Marriott CEO on TV this week after earnings? Said they're providing incentives. Because these companies, if they don't have enough employees to get back over 80%, operate 80% capacity, there's only one way they can make ends meet. How do they do that? You got to raise prices. And that's what they're doing. That's why but it's okay, and we see it. It's here. But the fact that the Fed governors, they're not even acknowledging this and saying, yeah, we're seeing, like Yellen came out and said, well, I see inflation, and she got wrecked. I don't know if she got direct call from Pelosi, from Biden. What are you talking about? We're not seeing inflation. We're not got the raise. Like 8 hours later, she changed her mind. Oh, no. I mean, I think Yellen was speaking her mind. You see the numbers. You see the statistics. It's easy. All of you see it. We all see it. Now, how does the Fed see it? The one gauge they look at that's supposed to mask inflation completely is also showing massive inflation. What does that say? It says that you need to take away the punch bowl. You need to slow down a little bit. Because inflation is here. And what worries me the most is it's going to get worse because you're pouring gasoline all over it. And the Fed's sitting there like they don't even know it. They don't want to raise rates. They don't want to take a punch bowl away. They don't want to lower leverage. That fuels the economy for now, but now it's fueling in ways that where every asset price at record highs and continues to go higher. So inflation is here, guys. I've been talking about this for the past couple weeks, trying to pound it into your head because you need to structure your portfolios accordingly. Doesn't mean you have to sell everything and run. Don't sell. Oh my God. That could happen next year, not now. But you're going to see leverage names get hit, and they're starting to get hit. The ESG names, look at ARC's holdings. Staples and utilities are usually bad in this type of market, although the ones that have pricing power aren't as bad. And again, a lot of companies have pricing power for now because everybody has money these days, getting free checks. You've seen a sell-off in technology. High interest rates result in lower spending on CapEx for most businesses, which means less money is going to be spent on advertising, technology, upgrades. Which is why even though some of these tech names, especially, every one of them reported blowout earnings, but especially you look at Facebook and Google, which is insane. These things are trading at 23 times forward earnings now. They're trading at market multiples growing 30% plus, which is, again, insane numbers, but probably not going to be sustained. And even they came out and said it. Don't expect advertising to be this robust. It's going to slow down. A couple of downgrades came out for Facebook, Google. So those names get hit. You've seen Apple get hit. You're thinking, wow, these companies have great balance sheets, though, and they are. They'll benefit from higher interest rates, just the cash on the balance sheet. But remember, they make money from how much their customers spend, and that impacts all their customers, so it's going to hurt technology. The best plays, banks. If interest rates rise, we have good exposure, especially to Curzio Research Advisor. Bought Goldman really, really at low price. We're up a lot on it now. I think it's going a lot higher. Goldman's in perfect position. Higher rates are going to be better for them. Plus volatility. Guys, did you see the volatility just on Thursday? On Tuesday? Holy cow. And yesterday's volatility with the NASDAQ, down 2%, up a little bit, down again. Bitcoin, up 1,500, down 1,500, up, back and forth, 10-year, up and down. Nobody knew what they were doing. The market was all over the place. The Dow finished lower. I think the NASDAQ might have finished flat. We saw stocks down 15%, finished the day up 1%. They were all over the place. That's great for Goldman. More volatility is great for Morgan Stanley, for Goldman. You're still seeing IPOs coming out. These guys are making a fortune and getting into crypto now because it's a $2 trillion plus market. They're well positioned. Liquidity and volatility, two great things, and that's why you're seeing Goldman crush their numbers. Cyclical stocks, the reopen trade is here. One go with cruises, who still don't have a boat in the water, and their enterprise values are higher than pre-COVID, which is insane. But hotels are going to see earnings explode. You're seeing, I think Caesars reported record numbers. These people going to casinos, domestic, the airlines are getting hit a little bit because they're issuing more lockdowns overseas. So I get that. You look at infrastructure companies, material companies, we're positioned in a lot of these within our portfolios. Those are great plays on inflation. Commodity plays, gold in particular. I think gold's going to 2,500, guys. I've never said that. I've got people on my podcast that said it's going to 5,000, 10,000 for the last 10, 15 years. I'm not a perma bull gold bug or nothing. I speak at a lot of these conferences. I have so many friends within this industry that I'm grateful for, that it's just amazing. But if you're looking at everything, this setup is absolutely perfect for gold. And you're actually seeing inflows into gold for the first time in a few months from institutions. Gold has no place else to go high. And you could buy some of these producers and mid-tier producers. You could buy some of them at some of the cheapest prices in the whole market. And they're growing earnings faster than everyone because they're producing at $900 to $1,000 an ounce. And we're at $1,800. I think we're going to be at $2,500 by the end of the year. It's inevitable. The Fed's not stopping. They said they're not stopping. Money's got to flow someplace. It's not going to disappear. People aren't going to go to cash, right? All these funds and BlackRock and the trillions, they make money by rotating it and keeping it into some kind of asset class. If you're getting cash, they can't charge you. Again, these are businesses. Don't forget that. They need to generate profits. But how do you set yourself up Get some banks in your portfolio. Get a lot of these reopen trades. Again, hotels are really good. Casinos are really good. Material companies are really good. Industrials. Names that have pricing power, able to pass off those higher costs, which is a lot of names now. Exposure to commodities, things like uranium's going higher, these stocks going higher. Lots of different places that are doing well, even though, you're used to those ESG marijuana names that are getting destroyed right now. That's normal in this type of environment. If you're a Curzio Research Advisory member, you're coming out with a great play that should do fantastic in the current environment of inflation. It's available around 5 p.m. today. I don't know what time you're going to listen to this. Make sure you check your mailbox. Just send that to you. Really exciting issue. So just, guys, get prepared. That's it. Get prepared. Get ahead of things. That's what you want to do. That's what we've done on this podcast for 14 years, getting ahead of trends, buying in early. Even through COVID, getting out early, getting back in a little bit later than expected, but saw the trillions coming in. But you want to prepare. It's here. I mean, we all see it. The Fed still pedal to the metal. And that's why you even have guys like Drunkenmiller and just Jeffrey Gundlach coming out. These people have been in the market for 30, 40, 50 years saying, holy cow. I mean, this is going to be very, very, very bad. And it's going to come a lot sooner than you think. So position your portfolios accordingly. Rotate into the right areas. You should have exposure in super high growth names. Like, that shouldn't be all your exposure, which was the place to be for what, 10, 12, 15 years? Growth, 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 growth. Now it's more value plays, cyclical plays coming back. The economy's going to grow at 7%. We see a lot of these names go a lot higher before inflation really, really kicks in. But names that spend the most money and are leveraged, those are the ones that are going to get hit the hardest. And we're seeing that right now. So be careful. So we get to our interview. It's a very special interview this week, which is being sponsored by blockchain.com. It's one of the most trusted cryptocurrency platforms in the world, over 70 million wallets, and over 800 billion transactions since 2011. Now, you can trade your favorite cryptos on blockchain.com, but you can earn up to 13% interest annually on your cryptos. It includes Bitcoin, Ethereum, stablecoins, USD Tether. A lot of people don't know you can earn interest on these coins. I mean, it really is fantastic. For more information, start your account, visit blockchain.com. It's blockchain.com. I am a client. I love these guys. I'm never going to have a sponsor on here that I don't believe in, that I don't use, because that would be a reflection, that's a reflection of me by promoting these guys. So, great sponsor. Definitely support our sponsors. It's a free podcast, blockchain.com. Now, my interview is with Kiersten Crum. Amazing story. This is a person that turned $500 into $50,000, which I'd have to say we've probably seen a lot of kids do, young kids do. Just with crypto and Dogecoin and things like that. But this is a great story. And we have a 21-year-old who now has 200,000 plus followers in social media platforms. And she took it upon herself to not say, to have that arrogance, which you see with young investors that make a lot of money, but she's teaching people and younger investors, she's educating them how to open an account, how to use compound interest in your favor. When do you hear a 21-year-old talk like that, right? So when I saw what she's doing, and I want more young investors involved in this, it's fantastic. It's going to be an awesome interview. Trust me. Again, it's from a 21-year-old who I really, really respect. She's all in. You're going to see it. It's going to be a great interview, guys. And let's get to Kiersten Crum right now. Kiersten Crum, thanks so much for coming on Wall Street Unplugged.
Perfect. Thank you so much for having me today.
No, thank you. I know how busy you are these days, how crazy it's been, and it's amazing. And I want you to start out there, right? You're a new guest. I want you to tell us a little bit about your story where in COVID, your dad lost his business. He worked at a grocery store, responsible for family bills. And then you started with a small amount in the stock market and built it up to a large amount. And now you turn it into an obsession. But I want you to explain it, just giving people the gist of it right now, because it is a fascinating story.
Right. Yeah. So basically, a year ago when COVID hit, was sent home from school, and I was one to be very involved with school and very busy with school. So that was already quite a transition for me. So when I came home, I kind of didn't really know what to do. And then at this point, kind of found out that my dad's business was also going to be shut down. It was a bar, restaurant. So of course, COVID hit, that was shut down, and kind of needed to be finding something to do. At the time, the only thing open and really the only job I could get was at a grocery store. So found myself working at a grocery store. Did not think I was going to find myself there. that was kind of a learning curve when I completely life switched like that really quickly. So found myself working in a grocery store, and then I also ended up picking up a job at a bar serving and bartending at night. And then this is kind of when I realized, let's try to see if some of this money can start to also work for me. And that's kind of where I found myself learning to get involved with investing, stock market, and really just as much I could learn as possible.
Now, the timing for this was great, right? It was at the market lows. I think you said, I read in New York Times an article on you. You now have 200,000 followers on TikTok, which makes you really popular.
Right.
So I guess, how seriously are you taking this? Because the videos that you're doing, and the reason why I have you on this podcast is it's so important to educate young investors. And when you educate young investors, you talk about everything which you do. You don't just talk about, hey, I made money, it's so easy. No. You talk about how you're reading books, how everything you don't know, you're writing down, you're learning, and then you're doing these videos and teaching everybody. And I think that's so important. But explain how important is that? Because I've been doing this for 25 years and I'm still learning something new every day. And just to check your ego at the door with the amount of money you made and say, hey, I want to educate people. That's pretty fascinating.
Yeah. So, I mean, like, obviously when I first started out, this was not something that, asked me a year ago, did I think I was going to be on podcast talking about the stock market? It's so crazy. So, I mean, obviously I started out kind of total newbie. I knew nothing at all, really. A few guys had told me to go to an investment club meeting, and that was like what sparked the interest for me. And then once I saw this huge dip from the COVID, the way that the market totally tanked after COVID, I was like, well, let's use this opportunity, kind of capitalize on this and let the market carry me up a little bit. So that's how I got started into it. And then I started sharing some of these videos on TikTok, and, it's all tumbled upon and grown from there. So.
No, and I see with the educational videos and some of the things, there's a couple of things that surprised me that you said, and it's for young investors out there, because most of them use Robinhood and I heard Thinkorswim, but you use Fidelity, right? Fidelity Pro. What made you use that?
Yeah,
and just because most people who are beginners do go on Robinhood, but yet you get free trading with a lot of these services anyway, right? In these days, so.
Yeah, exactly. Honestly, a year ago when I had no idea what a brokerage account is, like straight up had no idea. I asked some of the guys in this investment club and I was like, hey, what should I open up with? And one of them said Fidelity, and I just kind of didn't look anywhere else. And that's where I found myself. And that's the program I still use. I really like it. And yeah, now I kind of dog on Robinhood. I hate to say it, but I mean, looking at it now, it's just there's not as many features and stuff. So I'm really glad that I kind of started with a more technical program, because I was able to actually learn more than just having a simple chart to look at. I was able to actually start to analyze different trends and stuff on the program I'm using now.
No, it makes sense. And what about the market conditions? Because, we mentioned earlier how you were fortunate to invest, and even this is you're fortunate to invest at the right time, right? When things are at their lows, during COVID. But now you're seeing a lot of these stocks, and a lot of popular names I see among kids are ESG, if they're marijuana stocks, and a lot of these names have taken off tremendously. But as you've seen over the past couple of months, 2 months, a lot of these names have gotten hit hard. Is there something that you learned about that? Is it because I know you're focusing even on some of the bigger stocks that you're buying, but it's not just, hey, let's buy these aggressive stocks and make money tomorrow. Your message, which is different from most young investors, and this is why I love having you on, is more about, hey, you got to focus on the long term. Yeah,
exactly. Well, and I feel like when I'm telling my story, like when I started doing this, it was never that I expected to get rich quick. It essentially turned into helping me get rich quick, which is kind of weird, but like, I never had the game plan of like, I'm going to invest and make $5,000 tomorrow morning. Never had that idea. Eventually started getting to that point where I was able to do that, but I was buying stocks that, like, my first stock I bought was Carnival. I bought it because it was hit so hard on the dip during COVID. Obviously no one was going on cruises. I mean, still no one is, but I personally knew that I was going to eventually go on a cruise in the future, and I was a customer of the product. And that was kind of how I started getting into trading, was just products or services I enjoyed and just investing that way.
Now, how is it now? Because I played basketball for a long time, and my favorite team, by the way, is Kansas. Favorite team of any sport, by the way, Kansas Jayhawks. Which, yes, and hopefully, I think you said you may be going back to Kansas, but yeah, drop out everything we down, which is great. But when I'm looking at everything as a whole, basically. So when you're looking to invest in stocks, I want to talk about your methodology before we get to the Kansas part. I want to talk about your methodology in terms of, Is it just trading? Is it fundamentals? Is it, you're looking at P ratios, or is it like, what you mentioned with Carnival, right? Are you looking at things where, hey, now you're a different investor, because now when you're going out into the world, you're not just, you're looking at things differently, right? Because I was going to bring up the example when I played basketball, I became a referee and I look at the game differently than a player. Now you're going out to all these places. You said Carnival, which stood out just now, is something that that you're personally going to take. So do you go out and look at different things now? And is that the way you invest, or is it, which is fine, that's One Up on Wall Street, right? Which is one of the books you suggested. But how do you invest, and how do you find your favorite ideas?
Yeah, so it's kind of a combination. I feel like the way I began trading was definitely looking at what I was a consumer of. And now that I've been able to learn a lot more and kind of let those trades slowly grow my portfolio just without doing and being as attentive to the programs. Now I'm kind of looking more at like high volume stocks in the morning, doing a lot more of the technical analysis than fundamentals really, but just kind of looking at high volume in the morning, running a scanner, doing different things with charts, seeing what we're bouncing off different tracement lines, and just kind of going from there, doing more day trading now.
And who are some of the people that you personally follow? Because now you have this big following, which that comes with a lot of responsibility, right? Because even, it's tough. There's a lot of people that listen to you, young generation, everyone, right? So who are some of the people that you follow, and through social media platforms, or maybe on CNBC, or people that you really respect out there?
Yeah, Ricky Gutierrez, I don't know how to pronounce his last name. That was definitely someone I was looking up to, as well as Graham Stephan. There was a few YouTubers that I've also looked at. These two guys from Canada, Trader TV Live. Those were two guys that I really started when I started getting into day trading. I looked up to them and kind of, all right, how do I actually make this transition from, when I first started investing was more obviously swing trading because I wasn't past that pattern day trading rule, and like how to make the switch of how does one think as a day trader and what does that look like? And so watching those two was kind of a switch for me, and being able to kind of take that path and switch over to more day trading.
And now that you're like so engulfed with this, and you're seeing, the New York Times, which is great. And
right.
I could actually, I thought it was fantastic just to have you on here. So I'm going to show everybody this, which is cool. So
right.
Here it is. Trading stock tips right there. New York Times, you're on there, which is fantastic. That's awesome stuff. But now it becomes an obsession, right? Because I'm obsessed with this. I've been doing this my whole life. Right. How do you manage? Because to be the best at something and to be great at something, which it sounds like you want to be, right? And you're doing it at such an early age. How do you manage it? Because when you do that, you have to give up so much, right? So, you have your friends and you have social life and you have all that. For me, that was difficult at a younger age where, you give up some of your friends. You have to give up some of these things really to be great at something. Are you seeing that, or are you making sure you still enjoy yourself? Have you given up things? Because, now you're getting more mainstream and more followers. I could see you doing much more videos and trying to learn even more.
Yeah, it's definitely been a transition. I mean, I think when I first started all this, like my friends aren't into trading. Like my other girlfriends are not into trading, have no idea what I'm doing. And it was kind of a transition to be like, able to explain to them what I'm doing, because I would just be like, I'm sitting in my room, don't mind me, I'll be staring at a laptop for like 6 hours today. But I've kind of gotten to the point where now it's like I dedicate a morning shift, I like to kind of call it. Just treat it like a job, treat it like I'm going to a job for only a certain amount of time. I'm making a lot of my trades, especially now doing day trading, just through the morning up until mid-lunch, and not really trying to be too engulfed in it all day, so then I can still go out and have fun or do whatever the rest I want to do for the rest of my day.
And you talked about trading, right? And it was, you're saying, you're looking at different levels and volumes and stuff like that, early day volume and stuff. Have you found yourself learning new methods? Because there's so many different methodologies, and if one worked all the time, everyone in the world would use it. So not one works, right? So it's like you're combining everything. Because I do notice on your videos where we mentioned long-term investing, but also you're talking about how important it is for compounding that interest, which is such a tough lesson to teach young investors. Because when you hit my age, you're like, but before you know it, I'm 49 and you're pushing 50, like 20, 25 years is not that far away, believe me. And if you just save up a little bit, it's so hard in the market for young people, especially when you're seeing so many stocks before this recent like sell off of technology, a lot of crazy stocks that are going up 200-300%, right? And you made a lot of money in a quick period of time. But are you seeing yourself transition to stuff like that and say, wait a minute, I'm reading a lot of books now, long-term investors, and then you happen to do a video on compounding, which I think is fantastic because it's the hardest lesson to teach young investors,
especially in a minute. Yeah. I mean, like for me, that graphic, I had seen like the compounding graphic in one of my early like basic finance Gen Ed classes, and that was kind of where like the stock market stuck in the back of my mind. Obviously, I didn't really act on it. That was like 2 years ago. I didn't act on it then, but that was definitely an important concept that I wanted to understand more, and now I obviously understand that. So just very much learning how to manage between day trading and also the importance of compounding, like I've been able to read in any of these books. But it's really cool because I've kind of made so many different transitions within my trading, from being an absolute newbie, like I can't necessarily day trade right now, getting to the, okay, now I'm day trading, this is what I'm doing, growing my account more quickly. And now it's like I'm kind of slowly turning to where now I have enough capital where I can do more of the slower trades, swing trading, and more long-term trading, and I don't have to be as attentive on some of the day trades. So,
and what about I was curious what your dad has to say about this, your family has to say about this, because you did it at a time when it was really tough for everyone. I would think it's got to be a little bit inspiring to them, right?
Right. Yeah, and definitely like my parents they're not exactly stock market experts. Mm-hmm. So when I started getting involved with some of this, I think they were a little hesitant. Like, I don't know, I hear like a lot of people lose their money doing this. And I'm like, no, trust me. I think I know what I'm doing here. So it was kind of a learning curve for them, but also they didn't really want to say much because they didn't understand it, but obviously very thankful to see where I am now. And I think it's been really cool to watch what I've grown like this past month, especially on more of a social media presence, and sharing my ideas and kind of my story has been really cool.
Yeah, that is pretty awesome. And I want to get into one last thing here, because I know you said that some cryptos, you do own a few cryptos. I think you say you own Bitcoin, Ethereum, and XRP.
Yeah.
So, are you still looking at that? Because you also had a video saying, hey, I guess people learned a tough lesson, buy rumors, sell on news when it comes to Dogecoin, Saturday Night Live and everything. And I can't tell you how many young investors came to me and said, should I buy Doge ahead of that? I'm like, well, usually you should be selling it. Right? So, it could go higher or lower, but it was a good investment. So how do you feel about crypto? Is it just, hey, I got really good names and I'm holding them forever? Or do you take shots at them? Because, the reward that you could see from those in terms of how much risk you're taking is pretty incredible, right? These things could go up 10x, 20x, 30x, some of these things. So just curious in your take on crypto.
Honestly, I like some of these meme coins and some of these just crazy ones, I just am not interested in. I feel like I already know too many like fundamentals on like sticking to the stocks. So it's kind of all I'm sticking to. I have Bitcoin and Ethereum, and I did have some XRP. I actually don't have that anymore, but those two, Bitcoin and Ethereum, I'm going to hold those pretty long term. I don't plan on really trading those much. So I'm in crypto, but I'm not in some of these super hype ones, really.
And I'm going to bring something up right here, which is your TikTok page. This is an interesting number here. 190,000 to 200,000. Again, we talked about that earlier, but that's really incredible. And anyone, if somebody wants to follow you, what's the easiest way? Is it through TikTok, which I think is one of the greatest platforms in terms of anything, right? I mean, because I'm on Twitter and we have a very big following with the podcast, right? So everybody has their own social media channels. I know you're on Instagram, but TikTok is yours. And one thing I realized about TikTok is it's so much fun, right? I mean, it's I find myself laughing and learning compared to Twitter. There's so many, crazy people on there. People, it gets political. There's anger on it, right? And even sometimes on Facebook. But talk about how important it is for TikTok, because it seems like that's a much better way, that and Instagram, to reach younger investors, and also YouTube, which you said you were watching, compared to other platforms like Twitter. But how can people find you, learn more about you, and talk about that platform, TikTok, a little bit?
Yeah, of course. So you can find me on TikTok. It is stonk.queen. Kind of took the little meme of the stonk market and kind of ran with it. So yeah, definitely. I try to do a lot more videos on educating how to get started investing and kind of more terms, rather than some of these insane call outs like invest in this stock and you'll be a millionaire tomorrow. That's kind of not my vibe. But I mean, the TikTok community, especially like this investor stock trading community, is so huge. It's so crazy to see how many people are able to make jokes out of all of these trends and make them related to stocks, but then also have a video that's very informational and educational on how they got started investing. It's definitely really cool to kind of see the community in TikTok like that.
And gonna put you on a spot here. So
That's right.
what are you looking at now in terms of investing? I know trading, and we're doing this on Tuesday. This is going to air tomorrow, so some things might change for 24 hours. But are there any individual names or sectors or things that you're looking at right now? And if you have nothing right now, that's perfectly fine. I'd like to see if we can get a couple of picks out of all my guests.
Yeah, of course.
But if not, that's perfectly fine. But I want to see if there's anything you're actually looking at. Yeah.
Let's see. I was doing a little bit of trading this morning, actually. I took a good one on Facebook, got a $4 winner there. So that was what I was looking at this morning. And like I said, I'm kind of just doing a lot of those volume scans and trying to look at what I can just kind of pick a few bucks on, putting in some money like that. So that's kind of, it kind of changes every day what I'm looking at. I definitely have always been a fan of the EV sector. So I'm always keeping an eye on that. Tesla, if Tesla's on sale, I'm always trying to grab some more. So probably be getting some more Tesla this week.
And what attracts you? Because the younger generation I see is into ESG stocks. That they're into the Teslas, right? The ARK investments with Cathie Wood. It seems like that. Why do you feel like so many young investors are into that when there are so many great names out there and there's thousands and thousands of different investment opportunities? But that is what captures them the most, and those happen to be the most volatile. What is it about that? Is it you can make the most money off of them, or is it like you really believe in these trends? And some people believe in Tesla, Elon Musk. It's a religion. But I want to understand that as well, where there's so much out there to invest in, so many great sectors and names. But it seems like every young investor that I do interview or speak to, they're all pretty much they all own the same sectors.
Right. I think it's definitely, I mean, you touched on how volatile that they are. And I think that's something where a lot of these younger traders, myself included, are not necessarily scared, as like, we still have so much time. Like if this takes a rough dip this week or next month, it's kind of, oh, well, like, I think this is something I believe in the future, but there's so many opportunities to do all kinds of different trades. I mean, you can grab these for a long-term trade if you really think that this sector is going to be something that we see in the future, if every car is going to be electric. And also just the volatility wise, you can grab these for a day trade and make some quick cash as well. So definitely think on that side, it's kind of what attracts a lot of young investors to these type of stocks.
No, it definitely makes sense. Well, Kiersten, I know how busy you are. I want to thank you for your time coming on this podcast. It means so much because we do have a young audience as well. And I want to say, keep doing what you're doing. If there's anything I could do for you, let me know. For me at this stage, it's giving back, giving a platform to other people as well, because I've been doing this for such a long time. And I loved having you on. I love getting your perspective. And, again, it's an obsession. And then you have that responsibility because you have so many followers. And that's really, really cool. Because exactly. Like taking it serious. So I just want to say thank you so much for coming on. And one last time, if people want to follow you, how could they do that?
Yeah, find me on TikTok, stonk.queen. You can also find me on Instagram. My personal is just Kiersten Crum. And from there, you can find me everywhere.
All right. That sounds great. Thanks so much for joining us. I'll talk to you soon.
Appreciate it. Thank you.
Hey guys, great job on Kiersten. And for seasoned investors, maybe you might not be excited about it. She's 21. She's young. But you need to understand how young investors think. And it's important. I mean, a lot of us have kids out there. And it's hard to explain investment to kids, even to my kids. But when they see it through a social media channel, and she has TikTok, which I think by far is the best social media channel. It's the only one that makes you happy. Like you laugh, it's cool, it's educational. You look at every other platform, it seems like there's so much anger, politics, all this crazy stuff. I mean, it's, to me, I just find myself really enjoying TikTok when I'm on it and just going through videos than anything because, I don't know. If you try it, it's addicting. It's pretty funny. It's awesome. And the algorithms tailor to what you like and see what you like. It's really cool. Just give you more and more what you really love, which is awesome. So, but she has a massive, massive following. And, understanding what those young investors think, what they're buying, what excites them. I mean, that can help you tremendously. Hey, she's talking about Tesla, Facebook. She's really talking about ESG, but I hear that from a lot of young investors. And if you notice, the companies that they're buying, they're emotionally attached to. So they know what these companies are all about. They understand the macro picture. They're not just taking a stock and saying, wow, this is good fundamentals. No one ever heard of it. No, they invest in things that they hear of. They invest in things that they believe in, they want to learn about. And for me, it's just, I think if a stock's really cheap and I like the industry it's in and I think go higher, it doesn't matter. I'm going to go find it for you guys, wherever it is in whatever sector it is. Maybe it's in a hot sector, maybe it's not, maybe it's depressed. But certain sectors that they do follow. But I wanted to give her a shot and come on because when I see a lot of young investors, at least I come across, when they make money like this, and it comes with territory, it's perfectly fine. They're arrogant, and you should be arrogant. You should think, I'm better than everybody else. I know more than everybody else. Dogecoin, I told you it was going higher. That's great. For her to be where she is with her story and her dad losing a job and her, what she's done, what she's accomplished, saying everything I don't know, I read, I write down, and providing the educational videos and talking about, compound interest to a 21-year-old. Man, I wish someone explained that to me. And I had my dad there, but it wasn't really a conversation we had too much. But now that I'm closing in on 50, going to be 49 this month, closing in on 50, you think about it and say, wow, I wish I invested when I was that young. Because believe me, 20, 25 years goes by very, 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 very fast, very fast. And you could accumulate that money, 401k, very, very easily if, you're in the right stocks. And I really love what she's doing. She's not an arrogant person. She's working hard. She understands responsibility, how so many more people are listening to her now and getting those stories right. New York Times did a big feature article on her. So, I wanted to give her a shot, get her on here. And hopefully you guys liked it, really. And I want to hear from you, of course. I like the interview. It's about you, not about me. Let me know what you thought at frankcurzioresearch.com. Again, I had her on where, if you have younger kids, you could go to her TikTok page. If not, it's perfectly fine. I know I usually have a lot of experts on here and give you ideas, but I do like to get that. There's so many young investors in the market right now. It's a massive, massive market. These people want to learn. They're all dialed in. And I just seen it through cycle through my 25-year career where they buy when it's a bull market, they get destroyed and they hate it forever. And I just don't want them to hate it forever because they're so ahead of the curve. They're even ahead from where I was. And I've been in this industry my entire life because my late dad's been doing this for 25 years as well. So really appreciate it coming on. Let me know what you thought at frankcurzioresearch.com. So time now to bring in my buddy, Daniel Creech. Daniel, what's going on, man? How's everything?
Frank, very good, very good. Another beautiful Wednesday, man. A
lot going on. I mean, there's a lot going on. There was some really powerful stories this week that I definitely want to talk to you about. One of them, I think, was Drunkenmiller Interview. There was an op-ed in the Wall Street Journal talking about the Fed. This is something even you said. You said, we really need to talk about this, right?
Yeah, I mean, Stanley Drunkenmiller is a billionaire hedge fund. Now he runs a private office. He's one of the best voices that you can listen to, in my opinion, especially from the macro level. I mean, he does tremendous work and makes great returns. Obviously he's a billionaire. But the couple big ticket items he talked about, which we'll get to inflation in a minute, but you often refer to the gold bugs and how you can't be a diehard one way or other. You got to be able to change your mind when the facts change. Stanley Drunkenmiller, to his point, is as humble as you could be if you're a billionaire. At least he comes across like that on TV. Because he came out and said during this interview, and it's about 10 minutes long. Well, there's different segments of it. But I encourage you guys, go to CNBC, check this out, because he starts off and says, hey, I was dead wrong. I came on and I said a V-shaped recovery in the stock market was not going to happen. He outlined a couple other predictions that did come true, but he came out and said, hey, I was wrong about this. But getting to the gold bugging thing, he's talking about, and the big headlines are, one, crypto, and two, he thinks that the Federal or the U.S. currency could lose its world status, meaning that it won't be the currency of choice. Right now, it's the reserve currency for the world, and he gave some good talking points about that. Frank, what stood out to you out of that interview? Because I'll get more into that, but what about you?
That's a big statement. That's a big statement, because Drunkenmiller has sounded the alarm in the Fed. He did it in 2018-19, I believe, and had articles saying, this is getting a little crazy. And then we had COVID, right? So we understand, I think all of us agree, if you're going to stop people from working locked down, you have to give them something, right? So we all got that. That's over. Maybe it comes back. Maybe we get a different street. Right now, that's over. That risk is dying down tremendously, right? You accomplish it. You created inflation. I mean, you look at the unemployment rate and you're going to say, well, we need more jobs. You don't have jobs because you're handing people free money. But for Drunkenmiller, just, showing the facts that foreigners continue to be net sellers of U.S. debt, which is very, very rare. They could lose, the reserve currency status in 15 years. And I said it wouldn't happen to our generation. If the Fed keeps this current pace of what they're doing, just flooding the markets with money, we're going to see runaway inflation. There's no way to control that. That's what's scary. I think people don't understand. It's not you could throw money at it and you could no. The only way is you got to force a recession, right? You got to do exactly what the opposite of what you're doing now. You got to sell bonds. You got to take away the punch bowl, no more stimulus for people, rates go higher, it's going to be less people spending money. You're not going to have pricing power. Prices are going to come low. That's how you control inflation. We've never been in that environment since the 80s. And he's sounding the alarm here. And I agree with him. I've been saying this for probably a month and a half now. And, coming from him and coming from Jeffrey Gundlach, just the reserve currency thing was the biggest deal, like for 15 years. If you really, really believe that, I'm glad he threw that out there because I didn't even want to go that far. We need to go that far because it's hard for me to believe, and we talk about this, Daniel, you make fun of me, that the Fed does not see this. They don't understand what is going on. They were surprised that the unemployment rate went higher. They're surprised that they didn't add more jobs when you're giving people free checks. I don't understand. Yeah, I don't get it.
Yeah, Frank and I still disagree on whether it's done on purpose or not, so we'll save that for a different time. To his credit, Drunkenmiller, he did say the 15-year thing, and he said he could change his mind depending on if the Fed changes policy. From an investor standpoint, it's always important to know why you own something. So what you ought to anticipate as an investor and be thinking about from a longer term standpoint is he was talking about how basically $500 billion, I believe it was normally coming into the treasury market from foreign accounts as hedges, institutions, different things like that. When the coronavirus meltdown in the stock market happened, the bond market dropped as well, showing for the first time that treasuries weren't being used as a safe haven. So international money wasn't flooding in as a safeguard. That's a big deal. Now, it might be a one-off, it might not be, but anticipate interest rates moving higher. Forget about the Fed for a second, just based on the flow of money. And that's a big deal to pay attention to because money is not evaporating, it's going to flow somewhere else. So that's where you want to look at commodities and more inflationary things. The other big takeaway, Frank, is he thinks the dollar will be replaced by what?
He mentioned cryptocurrencies.
Well, he'll stop short of that. He didn't say Bitcoin. He didn't name anything. But he did say a group of guys from MIT or Stanford would come up with a ledger-based system. So, of course, if you're a crypto bull, man, you can take that and run with it. Because now you got in addition to some other billionaires, Tudor Jones, he's a billionaire, right? I believe he's a billionaire.
Of course, yep.
Him and, the other, Mike, how do you say Mike's last name?
Tepper?
No, the Grove.
Novogratz, yeah.
I always want to start with a G for whatever.
He was on CNBC. He was on CNBC this week, and it was great because Joe Kernan. I like Joe Kernan. I just wish he let the guests talk a little bit more, especially on Squawk Box, because you usually have great people on there. I'm a fan of Joe, but Joe is he was interviewing Novogratz and had a bad connection, and Novogratz had a bad connection. It was just like an echo and stuff. And at the end of it, he's like, you know what? You might want to sell just like one of those Bitcoins and get a new system. And Novogratz's like, yeah, you're right. It was so funny because I was thinking the same thing. I'm like, this guy's worth so much money, and yet he has a system where you can't even hear him. I mean, just get a decent webcam, and it was just funny. But look, I agree with Drunkenmiller, and you're going to see more people sound the alarm because the good news, the really good news, Daniel, is we see it. We know it's here. This isn't like a pandemic. You don't see it. If you don't see that risk in front of you, those black swan events, that's, just the whole banking system. People thought, subprime loan, it'll only be a little hit. They didn't know that these banks were leveraged 30, 40 to 1, and that they create synthetic loans, and which would destroy the entire system. We didn't really see that till later on. We see what the problem is. We see what's happening. We see what's going on. Hopefully the Fed does the right thing. And then when they do the right thing, it's going to be painful. I mean, we've been in an environment of easy everything for, since the credit crisis, right? And eventually we knew this was going to happen, right? We had inflation where it was controlled and everyone was surprised we didn't get inflated. We're coming from a very deflationary environment. It was different times. Now you threw trillions into the system. The pandemic is over. When you have people staying home, when you have chip shortages, you're seeing things for the first time that we've never seen. Plants closing because there's too much demand and they can't get enough out, so they're idling production. And some of these things that you never see before, you have to worry. But the good news is, usually when you see something in front of you, you're able to control it, you're able to stop it. The Fed can do something about it, and hopefully they do. So, that was the biggest takeaway I got from the story, but it was interesting. Yeah,
I mean, they can and they can't, because if they take the steps to negate inflation rising, you have to completely, the other thing so we got to get to Rick Santelli, but one more thing Drunkenmiller said that was so brilliant and just so plain and simple is that the Fed and the government are, Senate and Congress and all that kind of stuff are supposedly independent. Now, they're really not, but that's okay. you cannot pass legislation and debt and spend at the rate you're spending from a political standpoint. And it doesn't matter Democrat or Republican, unless the Fed is being the middleman and manipulating rates and buying bonds and all that kind of stuff. So they're in a tight spot because if they do what's right to fight off inflation, you're going to significantly stop and hinder all the policies that are being promised right now. So that's a big political divide, and that's going to continue. So from an investor standpoint, just keep that in the back of your head. Turning to inflation, and when they're not going to raise anything because they keep saying they're not worried about it and it's transitory. I know you joked about that being a key word. Rick Santelli said it best. The problem with the transitory deal is that they can move the goalpost. So if it doesn't go down next month, next quarter, or 6 months, they'll just say, well, transitory is 12-month period.
Yeah.
Why an 8-month period, 18-month period? And the scariest thing is, and this is where I believe it's still the lead story on CNBC with inflation, and everybody ought to watch, it's about a 4-minute video. But Rick Santelli says the problem with that is that if you're middle America and your food bill doubles, that hurts. From a Fed perspective, you look out a year, if it doubles and it stays there, then it's not growing year over year. And that's all they care about.
Yeah.
So in reality, you're facing higher prices and consistent higher prices, and the Fed's going to look at that and say, hey, we're doing a good job because it's flatlining, although it's at a much higher rate. So that's the nervousness takeaway, and you have to be able to decipher how they view things and how reality and how the stock market will come in. And like you said, we have not plenty of time, but you know it's coming, so you can prepare yourself now and invest along and according to.
Yeah, and Santelli has a problem. He just uses too much common sense. Yeah. It's not a good thing.
We need to get him on the podcast.
I probably can.
He needs to be on the podcast. I mean, that guy's great.
Yeah, I mean, just seeing him and all the economists on, and again, I've interviewed some of those economists who were on TV when the CPI number was released or the unemployment number was released, and just he was the only guy that knew what was going on, and it was amazing. And it was just he's been that way for a long, long time. Just the common sense point where you have Steve Leisman couldn't even find the number, and again, I know Steve Leisman. I met him. He's a good guy. It's just seeing them so surprised at something that seems so obvious to any single person living in America that pays their bills, that goes to work. I mean, it's pretty easy to see it. Who goes out to eat at restaurants, we all see it. But just to see how flustered they were, I'm like, man, how don't they see it? And that's, my biggest fear. Does the Fed really think there's nothing going on? And you brought up a good point. Yeah, it's transitory. They're not saying why it's going to be brief, but they could extend those goalposts. You said it well, and Santelli said it well. But another thing, too, where I was seeing all commodity prices go up. Now we're seeing gasoline prices go up, which is awesome, right? So the gas shows Colonial Pipeline. We had hackers come in. And, I mean, this is kind of a funny story in so many ways. And I say funny because it is actually funny where I'm showing it now, guys. If you go to Curzio YouTube research page where you could see this in video and we show everything, and which is really cool and show exactly what we're doing, what we're talking about a lot of times. But, Colonial got hacked, right? It was a ransomware attack, and they supply the Northeast. And the funny thing is that the hackers came out and said, "Oh, we're sorry. We're not political. We don't put politics involved. We just care about the money." Was
it cash, not chaos? Is what we want?
Yeah, we didn't want to create like a crazy macro event. We're sorry. It's like it's like you have a conscience now. Like okay, you didn't shut down the pipeline. So what did that result in? It results in not a lot of gas and a shortage of gasoline going to a lot of these gas stations. And it's funny how people react, because this isn't a major problem. They're probably going to be online in a few days. It's actually, their website's up and running now. But it's impacting states more like North Carolina, South Carolina, Georgia, even Virginia. But when you get down to Florida, I don't know if you know, up to about Orlando, and then you got like 2.5 hours to get to all the way north where we are. But up to Orlando, it's supplied by totally a different pipeline, right? That's where we get our supply from. So, but yet everyone where we are, Daniel, they're all going to the gas, and they're not just filling up their car; they're filling up like all these bins and putting them in. Like everyone's like the whole skill. Oh, it's like, guys, it's not that bad here. And even I talked to several gas stations too over the past couple of days, and they said, we ran out of gas. There's not really a shortage, but everybody feels a need that they have to fill up their tank right now, right this second. Even people that don't even drive that much. So now you're seeing a shortage. You're going to see gasoline prices, but the whole story is kind of interesting of how, one, I bet you the current administration's pissed off that the hackers came out and said sorry about this, because they would have been able to say, this is domestic terrorism, their favorite word, domestic terror. There's so much domestic terrorism around that everyone's got to watch out, don't go outside your house. But, how they just inflate the situation where they put things on, Daniel, and they're like, this is the 70s. I'm on. In the 70s, you were online for like 4 or 5 hours to get gas.
Yeah.
And there's like 10 cars, right? In Florida and North Carolina is a little different, right? They're seeing it. Don't get me wrong. But, you got to relax a little bit because I think this problem will take care of itself.
Yeah. I mean, it will. It'll be, it's an alarming flashlight on top of, hey, cyber attacks are here to stay. So, we'll have to work some of those into the portfolio eventually. But it's going to be a good work of, I hate to say this, but capitalism and governments, because governments have so many policies and stuff. And I got to give credit where credit is due. So Colonial, if you go to their website and look at their press releases, they've been given updates. And so the main pipeline is still down, but they got some sidelines and smaller pipes that are being mandatory operated and all that kind of stuff. So they're doing what they can. And Biden and the administration came out and suspended the temporary hours of service exemption for motor carriers. He did a federal government, I don't know if it's executive order, but basically it took away and says, hey, once everything gets up and running, which Colonial sounds like it's supposed to be by the end of this week, hopefully, because tempers are flaring with everybody on edge anyway. But, temporarily throwing that order out, or you know what I'm trying to say, Frank, I'm mumbling here. But this is going to be a huge thing because people are worried. I was talking to guys yesterday and they think, man, this is going to last for a couple weeks. Yeah. I'm like, if they get it up and running on time with these kind of exemptions, you can drive around the clock. You can get fuel delivered and everything. So yeah, it's another example of how everybody's on edge on everything. That's kind of where we are. So everybody needs to take a deep breath, be grateful for how smoothly things normally operate, and keep a level head about it.
Yeah, and there's also
or go fill up a 500-gallon tank and go home and hoard out.
Yeah, no, that is funny. And there's also a story that came out this morning, right when we went to air, that Biden's proposing a $2 trillion bill to study what's causing inflation rates to rise. I'll tell you what.
Hey, we'll do it for $1 billion.
I'll do it for $100 million, and I'll tell you exactly what's going on. You don't have to spend $2 billion.
Don't lowball it,
if you don't know what's going on
the table.
I don't know. I am probably leaving money on the table. I mean, but seriously, I'll do it for him for a much, much cheaper price. It's like baseball, right? You ever see baseball where you have the middle relievers come in? The middle relievers come in and they have to face one batter and they'll walk them. They'll walk them like in the 7th inning and then they take them out. They're like, all right, we need a right-hander instead of left-hander now. And those guys get paid like $3, $4, $5 million a year. I'm like, pay me like $1 million and I'll walk the batter for you. It's pretty easy. That's make sure impressive. I'll walk them, and then you only have to pay me. You don't have to pay me that much. It's just funny how people get paid. Anyway, I won't even go there because that's another rant. But thank God Biden's on this for the $2 trillion bill to study what's causing inflation rates to rise, since he has no idea what's going on. And which is insane to me. He's not the only one. I'm not picking on him. There's a lot of people within there. They should know what's going on. It's very easy to see. We all see it. But apparently the smartest people who we hire to represent us have no clue. They have absolutely no clue what's going on. We do, but they don't. So, which is fine. Now, we saw... What I want to talk about, Dan, is the massive volatility we saw yesterday. I mean, we saw whipsaws back and forth. Even today, you have the VIX higher. It seems like people are confused and they don't know how to play, where we had the unemployment rate come out Friday, then we had the CPI number come out this morning, and people are like, okay, inflation. You're seeing it all over the place, where the NASDAQ was really getting crushed. I think Palantir was down like 15% and finished the day up 1%. A lot of these leveraged asset plays and technology plays are all over the place. But what's your take on that? Is it, you think people are confused? I don't know. I'm just asking. I just surprised to see it was back and forth, even with Bitcoin, back and forth, up 1,500, down 1,500. It just, it seems like people are trying to position themselves, but they really don't know how to do it.
Yeah, I think it's just the new normal. I think this is what you should expect going forward. I mean, NASDAQ was down 2.5% yesterday, and then finished basically flat.
Flat, yeah.
Today it's down 2%. We'll see what, this is, mid-market, so we'll see where it finishes. But it just shows you, hey, you can't have trillions and trillions of liquidity sloshing around and not go places. So you're going to see massive swings. The way I would interpret that and use is, if you're a day trader, I would sell on rips and buy on dips. And if you're a longer term investor, focusing on what I hope comes from all this, and it will eventually, I just don't know when, is that it'll be a lot more stock pickers market instead of everything moving kind of with the wave of money. The tide comes in, tide goes out type of deal, everything moving up, everything moving down. So if you're a longer term, and as a longer term, those solid businesses that you have a lot of faith in, I would use the pullbacks to buy, for the longer term. Because think about this, Frank. Another way, I'll dumb it down to my level. Yesterday, there were certain stocks that had 10% or more swings. So the common sense in me says, is this stock really worth 10% less 15 minutes ago than it was now? What the hell changed? Did they hire anybody new? Did they get a new order? No. It's just algorithms going crazy and people, getting in and out. So I just think it's the new normal, and we've seen more volatility lately, and it's going to get a lot more lost, a lot across a lot different sectors.
Yeah, no, I agree. And Goldman Sachs, Morgan Stanley, this is the environment they thrive in. The more volatility, the more liquidity in the market, that's what you have. You're going to see those numbers. It's not like you're seeing numbers from stay-at-home plays that are no longer stay-at-home plays. And, people are worried that those numbers are going to come down. They will for a lot of companies, the Pelotons, the Zooms and stuff like that. I get it. But, it's just these guys have incredible earnings power, and you're going to see them continue to beat those estimates. You also have still a red hot IPO market. A lot of IPOs coming to the market, and the biggest ones are always going to be from Morgan Stanley and Goldman Sachs, and deals and mergers and stuff like that. So red hot market for investment banks right now, and that's going to continue. Some earnings, right? So some pretty crazy earnings. One of them is Roblox. And I love this company, guys. I really do love this company because my daughters actually play all the time. And it's always like, Dad, can I have $5 to buy this? Or can I have $3? And, most of the time, no. And sometimes we're just so busy. I'm just like, yes, here's $10 and make sure you don't bother me for 3 hours. But they're always playing. And it's kind of like educational. It's fun. They build their own things. You could build your own games within it. This is, to me, Fortnite on steroids. The fact that you could build your own places and everything, the amount of money that daily active users were 43.3 million, up 37% from last year in April. Hours engaged, 3.2 billion hours engaged. Bookings, 245 million, up 60% year over year. Daily active users, up tremendously, 17%. And also they said that even the users who are over the age of 13 were up tremendously. This is not your typical fly-by-night technology company snowflake type thing where, hey, this company's going to be... This company is it's like Coinbase. They're massive EBITDA earnings, just revenue generators. There's constant money coming in. As long as you're seeing cryptos and you're seeing more... EOS is up tremendously, right, Daniel? I mean, you had news on EOS that we have in our portfolio, which is up... How much was it up yesterday?
I think it went up 40% yesterday. And it was up another 10 today.
Yeah, it was Peter Thiel starting an exchange and going to use...
Well, a backed company, yeah, they're I think it's $10 billion is what they're going to invest, and or they raised. I don't have it right in front of me, but it was a 10 billion number, and to build an exchange. And I mean, it's going to be on EOS, and it took off.
Yeah, I mean, EOS took off, but still, just the exchange where that's not coming for a while. I'm sure you got to get licensed and everything, but Coinbase, it's just constant. The trading, more and more, these EOS is going up. That's great. You're seeing... Ethereum, over 4,000, which was incredible. But, more and more trading of, and it's not just Bitcoin, which represented 70% of the industry not long ago. Now it's like probably 45. So same with Roblox here. You have to realize that the amount of money that these companies generate constantly, there's a reason why, was it Epic Games owns Candy Crush? I forgot who bought them for 5-point-something billion, I think they paid for Candy Crush. And you know what Disney paid for Lucas and Star Wars? It was like 4-point-something billion. Think about that for a minute. That's how powerful these are. Why? Because it's all a fight for eyeballs, and these guys have eyeballs on them. Just with the 3.2 billion hours engaged, that's why you're seeing companies like Facebook and TikToks. It's how do we get to those eyeballs? Where are they spending the most time on? Here's one of the platforms you're seeing the younger generation spend a lot of time on, and younger kids, and then it's just going to come down to how do we advertise, how do we program these kids to do what we want, and then you get the advertising dollars or whatever. But man, the amount of money that these platforms make are absolutely incredible. And I wasn't surprised that stock went up 20%. It's now above its IPO price. It did fall a little bit, but still we're seeing pretty good earnings come in, but I don't know how long this can last, right, Dan? With all these shortages and, you go to Best Buy to buy something and it's not there, you're going to buy it someplace else, right? So I mean, it's going to impact companies. You'll have higher taxes coming, definitely, corporate taxes. Just a lot of risk. You have inflation here. So can you continue to pass off those higher prices? Is the Fed going to do anything? Are they going to, when you look at all these risks in the marketplace, you have to be a little concerned where, a lot of these names are trading in terms of valuation, right?
Yeah. Oh, absolutely. Yeah. I mean, there's always reason to be concerned, and there's plenty of them right now. I know I'm going to sound like, too repetitive, but can Roblox continue this kind of growth? Maybe. Can everybody? Absolutely not. So again, it's going to get much more selective on on the results going forward now that a lot of things are not only priced in, but now you're going to be comparing. We only move forward. And so once you start looking back, comparing on these amazing returns, that's when you really have to start paying attention. We're still a little ways from that, but Roblox is like Facebook to me. I remember talking about it a few weeks ago or several weeks ago whenever it went public. Had no clue what it was. Still don't. It's only about 15% higher than its IPO price. So long term, this might be a decent entry point. But I read through the earnings release. Yeah, I mean, the growth is incredible. Facebook's same way. And, you probably ought to just buy this even if you don't use it. I have a Facebook account. I think I get on there once a year to wish everybody thank you for telling me happy birthday. But I think I've been a bull on Facebook for a long time, even though them Wall Streeters, was it Citigroup that downgraded Facebook and Google?
I think so.
Did they not listen to this podcast? What the hell is their problem?
Yeah, they said that they're expecting advertising rates to slow.
Yeah.
Going forward.
Anyway,
listen.
Like I said, I'm only bullish on Facebook whenever you see a headline about the government breaking them up. That's when you keep buying it.
And I respect that. I really respect that downgrade. I mean, I don't know if I totally agree with it, but it's against the grain. Everybody else is bullish on these names completely. You saw the numbers come out. It's easy to get super bullish and say these things are going a lot higher. And this guy's just like, hey, you know what? It's going to slow down a little bit. And I like that. I like reading just, other perspectives. People have different opinion. It was solid. I mean, I was having fun. It was a solid report. It's very cool. So it wasn't just like, a guy making his name for himself. He already has a name. So, no, it's interesting. That was an interesting call. But I just saw it come across CNBC right now. They said that Coinbase, the number one selling app in the Apple App Store right now. So
there you go.
You're going to see more people go onto crypto. You're seeing it. This is a real industry. And you talked about a study, right, in crypto and just the average owner and who's done by. I forgot you brought up some stats. You have those available? That was pretty cool, actually.
Yeah. Gemini, the exchange started by the Winklevoss brothers, the billionaires, gave them some fun stats. And now I'm sure this is just, I don't know how broad this was. I was skimming through this the other day, but yeah, it caught my eye because the most bullish case for crypto, roughly 13% of U.S. adults plan to purchase cryptocurrency in the next 12 months. That's pretty cool.
Yeah.
That's approximately 19.3 million adults. Let's see here. There's another fun couple things. There was a lot.
The average age and stuff?
Yeah, it was mid-30s making 80,000-ish a year, I think is your average crypto owner. So that says a lot just about the demographics of it. Let's see here. I thought the big standout was how many people plan to buy it over the next year. That goes hand in hand with what you're saying about Coinbase getting downloaded. But 74% of crypto holders are men. 77% of crypto owners are under 45.
Are under 45. That makes sense. I mean,
so along with ruining the earth by using too much electricity, now it's going to be sexist and racist. So watch out for those headlines and pullbacks as well.
It takes up too much electricity, right? So.
Ooh, I was wrong. I'm sorry. 38-year-old, the average cryptocurrency owner is 38-year-old male making about $111,000 a year. Now, this is again with Gemini.
Yeah. No, it's interesting, but there is a learning curve here. But I could tell you the reason why more and more people are going to use crypto is because when I first really got into crypto, say 3.5 years ago, before we did our CEO token, it amazed me how these people they talk a different language. It's Chinese, proof of stake, proof of work, all just the technology. If you read the white papers, there's maybe 0.1% of people that understand what this is about. And now you're seeing companies like Gemini, a lot of these other platforms that you can get on Coinbase, even the Robinhoods, right? What people complain about, where you make it very easy, you dial it down and you show, what these things are about, how easy it is to buy them, how easy it is for you to get money from your bank account over to an account and buy Bitcoin or whatever Ethereum, and then sell that and get that money back into your account. That used to be a major process. Signing up for an account used to take 3-4 days. I remember when we had, you look at custodians, when you have custodians that you're raising money in crypto, if it's just crypto, it goes to a different custodian, and they would provide codes for you, special codes for you, Dang. I'm not kidding. So they would be like, we're going to do a number code, and your number is +2. So if I say, if they go 7, I would go 9. Right? Just hypothetically, it could be 5, whatever. It's plus, and that's how they know it's you. But if you go -1, so if they say, whatever, they say 3 and you go 2, you're under duress. I mean, I was like, what? What does that mean? I mean, that's how crazy industry was just in 2017, 2018. Now you're seeing things get a lot easier. And when you see things get easier, you get more adoption. A good example of this, I explain this all the time, is Michael Lewis. Michael Lewis got my mom to go to see Moneyball, which is about statistics and baseball, the two most boring things on the planet. And got my mother to go see. Why? Because you dial it down, you told a story and the power of stories. And now you're hearing so many different stories too, of the people buying Dogecoin and being rich, and young kids turning $1,000 into $500,000, and people see that and they want to get involved. And I think I really think we're just in a very early stage of this. There's going to be so many different facets of where this works. And even for Drunkenmiller to come out and say it could be guys from MIT or Stanford that create, some kind of digital token, whatever, it's going to happen. It is going to happen. So, it's an industry that's here. I think you're going to see that age go up and higher. You're getting more institutions involved, but I still think we're in an infancy in this industry. Doesn't mean Bitcoin's going higher or lower, but there's a lot of different trends within this. NFTs we saw get hot for a little while. DeFi, we're going to see more exchanges, especially for security tokens, getting launched over the next 6 months. Just a lot of exciting stuff coming down the pipeline, which is cool. I think it's going to disrupt more and more industry. So I'm pretty excited about it. But it's amazing how so many people are really, trying crypto for the first time, right?
Yeah, absolutely. And the big takeaway there is just have some exposure to it, either through stock that is involved in some crypto mining or something to do with that. A lot of them are holding it on the balance sheet, and also buy some cryptocurrencies. You don't have to put a lot of money in it, and you don't have to buy just Bitcoin. There's a lot of other ones out there. So yeah, at least have some exposure to it, because it's not going away. So it'll be crazy volatile, but have some exposure to it as an investor.
No, absolutely. So yeah, a lot going on this week. We covered a lot, Dan. I want to thank you so much for coming on, man. I really appreciate always getting your thoughts and stuff. So again, lots of positive comments. I like it when it's negative, so I want you to talk politics a little bit more. This way, people.
Hey, I've given Daniel, I give credit where credit is due. So
Daniel at CurzioResearch.com.
That's right.
Don't send them to me anymore. Send them to Daniel. I'll be more than happy to read them on the air, because some of them come in, they're funny, but it's pretty cool. But Dan, thanks so much for joining us, man. I really appreciate it, buddy.
Cheers.
Okay. And by the way, don't go anywhere yet, because last thing here is we're getting a lot of demand for our Dollar Stock Club, which is an introductory newsletter, basically. It's only $4 a month. It's a unique product because you listen to this podcast and we get these ideas through our guests. And sometimes they have funds and we'll pick an idea from there. Sometimes they'll talk about it on the podcast. And a lot of times, since I know these people for a long time and doing this for 14 years, we talk before and after and different ideas. And sometimes we'll throw some of those in this portfolio. But you're getting a host of ideas from numerous great minds and people, and helps us get into trends and stuff like that. The portfolio is doing very, very well, which I'm happy about. But Daniel, you do a lot of work on this portfolio on Dollar Stock Club, and just get to see a lot of people come in at the price point at $4 a month, which is $1 a week basically. You're getting a pick almost every single week. Is really cool. Again, introductory. You can cancel any time, but I know you run it. You're having fun with it, right? Yeah,
it's good. We keep it short and simple, but it's a great idea generator, because just about every week, you get a different sector or a different expert or a different personality on there talking about what's got their eye. And it's just neat to pay attention to a lot of different things of what people are paying attention to. And a lot of times you get some big winners. Of course, people are going to be wrong, or we're going to be wrong on what sectors or whatever we choose. But again, it's an entry-level idea generator. And it's a good product. And hell, for $4, jeez.
Yeah, I know. And just a good example of this, guys, is you hear me talking about inflation. I'm worried, but there was emails that came in from people saying, you know what, Frank, I think we're in a deflationary environment. And I don't agree with it. But I like when we have guests like that on and challenge it, because even we had Chris McIntosh on recently, but we had him on over a year ago, and he was saying that he likes oil stocks. And I thought he was crazy. This is like, not even midway through COVID. I'm like, this ain't no way. So me, I disagree with it. And sure enough, it did go down a little bit, and then it surged. We bought an ETF. But it's just you're getting really good names from everybody, from experts. And not only that, from my perspective, too, what I love is you're able to keep track of the performance on a lot of these people, what they're saying, which, again, I don't just want to put anyone in front of you. And if they're giving you a bad picture, losing money. No, it's my job that to create, creating this podcast, I say it's about you, not about me, just getting the right people, vetting them. We're all going to be wrong on certain picks. I love guys that come on and explain that right away and say, I was wrong on this, but here's why, here's what we're doing. It really has that accountability factor, which you don't see anywhere on Wall Street these days, or on a lot of different things, especially in politics. Like people say the wrong thing. Never one says, I'm sorry, I'm wrong. Never. This is like something that you hold people accountable. And it's resulting in a lot of great picks and a lot of great guests coming on. So, if you guys are interested in that, you go to our website, curzioresearch.com. Again, it's a very, very low price point. We don't make money on it. The goal is for anyone out there who doesn't know us, that's that introductory newsletter. And then when you see what our research is all about, you listen to the podcast more. Most of the times, you're going to subscribe to a lot of our products, which goes for a lot of our subscribers. They don't subscribe to one, they subscribe to many of our products. They're all really, really good. And we got great editors here and people do really, really great research. So, guys, that's it for me. Thanks again, Daniel, for coming on. I appreciate it. Thanks so much for listening. Enjoy the weekend. Have fun. Weather's getting nice. Hopefully you're able to get gas. And it's not too crazy if you are on the East Coast. As always, I really appreciate all your support. I'll see you guys in 7 days. Take care.